A 735 rupees share now available at rupees 326. Is this a trap or a golden opportunity? So imagine this. Last month you wanted to buy shares of a Tata company. Price was rupees 735 rupees in the unlisted market. Today, the same company is launching an IPO at just 310 to 326 rupees price range. That's a 56% discount. This is Tata Capital, Tata Group's lending business. And this Monday, that is October 6th, they are launching one of the India's biggest IPOs this year, worth approximately 15,500 crores. But how come such huge discount? What's the catch? Let me walk you through it. Tata Capital is India's third largest diversified NBFC. They don't just give car loans, they also give personal loans, business loans, housing finance. Out of the total issue size, 44% is fresh issue and 56% is offer for sale by the promoters Tata Sons and also International Finance Corporation. 35% of this issue is reserved for the retail. So coming to the financials, last year the revenue stood at 28,370 crores, 55% jump year on year. Profit was also up around 10% and stood at 3,600 crores. The loan book size was around 2.33 lakh crores. The numbers look solid on paper. Plus, they have a AAA credit rating. That means their borrowing costs are low, and that unlisted price of rupees 735, that we can say it was a pure market speculation. This IPO pricing is actually quite conservative. But here's where the things get tricky. Bad loans are rising. Gross NPS jumped from 1.5% last year to 1.9% this year. Might not sound like something big, but in finance, this is a red flag. Also, their provision coverage. The safety cushion lenders keep for bad loans by recording provisions. That dropped from 77% last year to almost 59% this year. That basically means that for every 100 rupees NPA recorded this year, they made 59 rupees provision. So if the loans default, their safety net is weaker than earlier. Plus 20% of their loans are unsecured, which means they carry higher risk. They recently merged with Tata Motors Finance, which historically carried a relatively weaker asset quality profile compared to Tata Capital. They also have pending legal cases worth more than 13,000 crores. Now let's compare this to Bajaj Finance. Bajaj Finance PE ratio is around 35 times and Tata Capital's PE ratio is 38 times if we consider the lower price band. So it's slightly more expensive, but here's the perspective. Tata Capital has the brand power, the network, parent company backing, and also long-term growth potential. So if we talk about the grey market premium, it's around 16 rupees per share. That means roughly 5% listing gains is expected, which is not massive, but it's decent. So what's the final verdict? If you are a long-term investor, you trust the Tata brand and can handle some risk, this IPO makes sense for you. But if rising bad loans, merger challenges, valuation, and sector competition worry you, maybe you should skip it. Do tell me in comments below, are you applying or avoiding it? Save this video, share it with friends looking at IPOs, and follow the Market Scan for more such daily market insights.